A former Bank of England official, Brian Hilliard, chief UK economist at Societe Generale, joins us now. Lovely to have you in the studio. Brian, let me start by getting your reaction to those UK industrial production figures that were out just this morning, showing that manufacturing output unexpectedly declined in February for a second month. I mean, does that perhaps support Mervyn King's comments about the GDP growth being somewhat uneven and sort of zigzag shape, if you like?
Well, his zigzag comment was on GDP.
Yeah.
And that is going to be right. And I think the big swing factor will be services. And what we've seen in the latest surveys is that services were actually very strong in March. So I think we're going to get a bounce in Q1, probably a weaker Q2, and then a bounce in Q3.
Yeah, but if manufacturing output is declining, then surely that's going to impact growth?
It is, but it's secondary to services. I think for the first quarter as a whole, industrial production is going to be roughly flat. So that's not going to do much one way or the other.
What are you expecting of the meeting today? What are we likely to get with regards to stimulus? Will the Bank of England continue with QE?
Oh, absolutely. But this programme is meant to run until up to the date of the next meeting. The question is, do they choose at that meeting to extend the programme?
What do you think will happen?
I had thought they might just close out the programme with another 25 billion, but I doubt it now. I think the game has moved on. If they think they need to do more, I think it's at least 50 billion, and I don't think they're ready to do that.
Why? Inflation?
Well, I think the inflation numbers, although we have this little debate going on with Andrew Sentence, for example, are coming down. The oil price has actually come off again. Yeah. And the big contrast is going to be between last year and this year. About 4.5% last year, 2.5% this year. That's really a big improvement.
So you don't think it'll come down enough for the Bank of England to hit its target by the end of the year?
Correct, but it doesn't need to. I mean, it's always a rolling target. I think it is looking also at growth, although it doesn't say that has equal weight.
Why has the rebound in private investment been so slow here in the UK?
I think two reasons. One is the uncertainty about the sustainability of demand growth, and the second is concern about liquidity. Companies are cash rich, so they're overflowing with money to invest, but they are very, very cautious, and I don't think that's going to change quickly. Why? Because they have been damaged by a very, very severe recession. They have been struck by the difficulty gaining finance, although large companies are okay, it's small ones, SMEs who struggle. So that kind of memory is still very raw. It's
interesting you make the point about struggling to get finance, and Adam Posen was saying that corporate investment has been higher in the US because they have more options available for financing to actually, you know, push ahead with investment, and then also because they're not so subjected to the risks in the Eurozone. And if that is the case, does that mean that the UK government's measures in the budget to lower the corporation tax are unlikely to have much of an impact to get businesses to spend more?
Well, the corporation tax story is a medium-term trend. It is inviting companies into what they view as a friendly environment. I think that's a good move. For the cycle, it's more important to see whether you can improve the lending environment.
All right. Brian Hilliard, chief economist at Societe Generale, thanks very much for your time. Good to get your analysis on this.